Welcome back, everyone. Welcome to Mike on Money. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And thanks for joining us again this week, where we'll take a dive into everything that's going on in the markets. And as always, we'll tackle a topic, excuse me, Biden's $2 trillion infrastructure plan and package. Excuse me. Obviously, we picked this topic a little early, given that it has actually not passed yet, and it is in the form of negotiations. So we are going to talk about what's in there, what they're trying to achieve, and what that means for the markets and investing going forward. So we'll tackle that at the end. But as always, remember everything we talk about here is for educational and information purposes only. Always seek the advice of a professional advisor. Do your own due diligence before acting on anything in your portfolio. If you have any questions or you want to know more about any of the topics we cover, of course, just go to mikeonmoney.com. Happy to answer any of your questions there. You can reach us in all the normal ways. If you're watching live today, of course, this will be available on our podcast and on video on YouTube. But if you're watching live, just click that question button if you have any questions or any feedback in general. If there's anything, other information you'd like to see us present on this topic or other topics you'd like us to take a deeper dive into and bring it to video for you as we try to do these things. Well, we do Tuesday live, of course, at noon, and we try to do a Friday video once a week on a specific topic. So let's dive into what's going on out there today. It is day 397. I am broadcasting from my underground bunker, which we have been doing for a while now, since the pandemic closures. Of course, we've gone into more shutdowns here in Canada as the numbers start to soar, but we've touched on the Canadian and BC situation a little bit. Let's take a look at the US. Down in the US, we are looking for that US Consumer Price Index for March. So keeping a really close eye on inflation, as we've talked about, since these stimulus packages have started last year. Of course, it is a key player in the economic recovery and potential slowdown of that recovery. So we'll take a look at March's numbers this week as they come out. And the Bank of Nova Scotia starting their AGM, their annual general meeting. So that starts the Canadian banks off on their AGM season. So we'll see those coming up in the next couple of weeks as well. Stock futures have been pretty steady. They've held in there despite the inflation outlook that we are expecting probably a sharper number for March or a bigger increase in March over previous months, even though it's been creeping up slowly. But markets, the stock futures have held in there. All the major indexes are still triggering or showing an economic recovery, even with that higher inflation, which is good, which is kind of the outlook that we've been having. We're just keeping an eye on certain sectors that will be hit harder. And of course, the bond rate yields have been rising as well with that movement. Other insights here, quick fixes. So Biden agencies has been out there reversing a lot of Trump's Wall Street friendly rules. Of course, when the Trump administration got elected in 2016, a big part of what they were doing was unwinding a lot of the restrictions that were put in after the 2007-2008 financial crisis in the US, just to make certain banking, certain dealings easier. And that included everything from EPA changes to banking structure changes. And of course, now the Democrats under Biden are in there, closing off some of those loopholes, bringing back some concerns that they want to prevent another 2008 scenario of a financial crisis of certainly of that proportion, especially in the lending world and the financial world. So that's going to continue. That was pretty much projected as we went into the 2020 election. So no surprises there. The winter storms in Texas, continue to have challenges for different areas of the U.S. market. And now the RV industry, which is a massively growing industry in North America in general, just with the Asian population, more seniors like buying their RVs and going out staying at these RV parks is becoming more and more mainstream, especially with not being able to travel. However, some of the manufacturing components, mainly foam, which is largely manufactured in the U.S. In Texas, got shut down. So that's kind of shut down all the deliveries, or a lot of the deliveries for the RVs in the United States. So much like we've seen supply demand around the world for all kinds of products that have increased in demand through the pandemic, such as building supplies, renovation supplies. Now we're seeing, and we're going to talk more about microchips around the electronics, but also even the RV business has been under pressure for the supply chain. So just another thing driving inflation as some demand outpaces supply out there. The U.S. is going into one of their one of the biggest treasury auctions to restart its yields. So this is new debt. So they're going to go out and auction off $271 billion of new treasury bills in the U.S. Of course, looking for a rising yield there in order to sell that much debt. The yield will have to be pushed up in order to create the demand for it. So we'll keep an eye on, see where those rates land. Sorry, just lost control of my slides here. Here we go. Biden's also facing growing Republican skepticism around the infrastructure plan. As I mentioned, he rolled out his plan, which we're going to cover here at the end. But it looks like there's going to be more negotiations. Even within his own party, there's some concerns over how some of that $2 trillion is going to be spent. It's not completely off the table. This is kind of both sides of the floor have been pushing for infrastructure improvements for years. If you remember back in 2016, even the Trump campaign was pushing heavily on investment in infrastructure. The US is renowned for being behind the rest of the world as far as the quality of the infrastructure and the expansion of the infrastructure, and also in the types of technologies they're using. So this has a lot of support, but of course, with the situation going on in the Senate down in the United States, everyone wants their own little twist to it. So there will be a lot of back and forth before I think we see this go through. It's funny, the tale of two tapers. So this is, just a different focus on different Fed. 8 years ago, Jerome Powell was still a rookie as a Federal Reserve governor, and he surveyed the U.S. job market and declared that the central banks, were ready to reduce the support for the economy. It rolled out through the 2007 to 2009 financial crisis. Now he's dialing that back. So just change in economic times, change in views. We'll have to keep an eye on exactly what they go ahead with as far as those the supports for the economy and how much the economy is going to grow on its own as we come through this recovery. The U.S. budget deficit hit a record high for March as aid payments go out. So this is just those checks that the Biden administration promised. The $1,400 stimulus checks went out. It was a $660 billion record month for deficit. Those dollars were meant to be a one-time spend, so hopefully not a reoccurring or ongoing records as far as the deficit goes. But it does put pressure on the U.S. Debt management going forward. They've broken all kinds of records in 2020. Of course, their debt exceeding GDP, which is supposed to be a breaking point for countries. It wasn't, which was good. But now they have the big challenge of what they're going to do moving forward. And that is part of the stimulus package of how all this is going to be paid for. And we'll cover that off here in a moment. U.S. consumers raised their outlook on inflation. So this is just more and more consumers are starting to see expectation and are starting to expect it to continue to rise as these stimulus packages roll out. So nothing new as far as the discussion goes. But we are obviously monitoring very closely how quickly that inflation rises, because that will have an impact on the markets in the long run. Of course, we need to see the economy recovering faster than inflation is growing, because eventually we will have to see interest rates rise to offset that inflation. They do have a lot of arrows in the quiver that they're using to slow inflation down without raising interest rates. If you remember, we are looking into hopefully into 2022 before we see those rates rise. And if they can stave off inflation long enough, or stave off the growth in inflation long enough to get to 2022, hopefully the economies now have enough momentum that they can absorb a little bit of interest rate hikes and continue to grow, or at least continue to remain stable without a rise in interest rates sending the markets into another recession. BC, of course, we're into our third wave of COVID. The numbers here have been growing. Ontario set in all kinds of records. The hospitalization rates in BC are at all-time highs. The ICU numbers are getting to all-time highs. We're hoping, I know that Dr. Henry came out yesterday hoping to not have any further restrictions put into place that they've already rolled out. However, the numbers continue to get worse. So the expectation, I think, from a lot of experts out there are things will probably get a little tighter in the province. Obviously very concerned that, the original, I think it was April 18th or 19th for these restrictions was supposed to be the expiry date. We're already the 13th today and numbers are worse than ever. So, is it going to be extended beyond that mid-April date? Probably likely, but we're keeping a very close eye on that. The good news, of course, the vaccine rollout continues. I heard, and I have not seen an official announcement yet, but I did hear yesterday that they plan to, that they're at age 55 in BC, I think today, and age 50 by Wednesday this week. So I'm hoping to be better on the list sooner than later. If you're not aware, you can go register regardless of your age. You can go on the website and register. You need your BC care number, and of course your postal code, just to say what area you're in, and contact information. And it will text or email you, whichever you prefer, when you become eligible for the vaccine. So you can go register at any point in time, and the system is supposed to. I've not experienced it yet, but the system is supposed to notify you as soon as your area and your age group is eligible to book for the vaccine. So encourage everybody to do that. If you do have an address on your driver's license or a utility bill in Whistler, age 18 and up, you can go register and you can go get the vaccine there. They've had a big outbreak, of course, of the variant up in Whistler. So they've opened that up for all age groups, and I think most of the numbers they've seen there has been in the younger age group. So that's why they've opened it from 18 plus. So more and more of the vaccines being rolled out, hopefully to slow down and cut off this third wave. We are now officially in Canada more infection per million population than the US is. So we've now surpassed the US in those numbers, which is not a first place that you want to have. So let's take a look at the US markets. As I mentioned, the US Labor Department is coming out to release their data, the Consumer Price Index this week. We are expecting it to rise, trending towards that 2.5% rise, jumping up from 1.7%, which was early in February. Food and energy components being the most volatile. 3% is kind of the cap that any of the central banks really want to see. And that's where they, really when that interest rate power or tool comes into play. So it is creeping up a lot faster. Hopefully they can slow it as they go into the spring and summer months with other tools. The state-run Fed banks are having a conference, a roundtable in Ohio. Again, just to talk about how they're going to stimulate the economy, how they're going to create jobs. Looking at all the states are basically running these. The Chamber of Commerce is being involved. They're actually interesting meetings to read about, to see the different ideas and how the different regions are dealing with trying to stimulate economic recovery and turnaround. And really, this is going to lead into what we're going to talk about is that infrastructure bill, because it's not just infrastructure, but it's also around stimulating economies, stimulating new jobs, and that we're going to cover off as well. In the US, also, Microsoft announced that they're going to buy an AI firm, Nuance Communications, for about $16 billion, and this could be the push into healthcare. This leads right into, a couple of weeks ago, we talked about disruptive technologies or innovative technology. Healthcare was in there. Of course, AI is in there. The healthcare industry I've talked about many times. Existing technologies now being applied, and this was really pushed forward by the pandemic of bringing technology into healthcare, using it more effectively, using it more efficiently, more efficient for doctors, more efficient for patients, very much so, especially for the more rural parts of the countries, but also for those who are mobility impaired, right? A lot of people and elderly can't, go into the doctors all the time. Is not that easy, and be able to do that remotely or do that virtually is a massive growth area. And of course, we're seeing Microsoft making a big investment into that with this recent purchase. And here in Canada, of course, TELUS has been doing it for several years now, been buying up a lot of these private and applying technology, private medical clinics, and applying technology to it to bring that more to the forefront of their offering as well. So we are looking for a lot of expansion in that area. Alibaba in China is shrugging off a 2.75 billion antitrust fine. Alibaba, of course, is the Amazon of China. 2.5 billion, obviously a big number, but not really for the types of numbers that they produce as far as revenues go. So this was an antitrust crackdown in China. So they're pushing to overhaul how they deal with merchants. Not much difference from some of the cases against Amazon of how they deal with merchants. Accusations of copying or using the merchant data in order to favor Amazon's own sales over the merchants. So very much so what we're seeing Amazon in court for. Alibaba was fined with 2.75 billion, and they're just going to pay that and move forward. Maybe they'll make some changes. Maybe we'll see them back into court again. These big fines don't seem to slow down these economic giants that much these days. GM is moving to increase its marketing spend. Of course, when we went into the pandemic last year, one of the first areas that companies cut was marketing dollars, especially advertising dollars. Now, a lot of that was shifted to digital and e-commerce and online advertising, but there was a big slash to the promotional budgets. GM is now starting to increase that again as they see themselves coming out of the pandemic and more things opening up in the US this year. NVIDIA, of course, the video card maker. If you're a gamer, you know them really well. They're the elite or the Cadillac for video cards and gaming computers. No surprise they went out and bought ARM last year. We talked about this, I think, in late 2020, that there was a looming chip battle coming between the manufacturers. Of course, Apple has started making their own microprocessor, moving away from Intel. Intel's, which is kind of at the forefront of the CPU industry or supply. NVIDIA, which was the GPU, of course, your graphic card, but they bought ARM Technologies last year and now are making a play to move into the main CPU market. And of course, more competition. Intel's adding a layer of complexity with an antitrust review of their deal of buying ARM. Seeing that the unfair competition. This is going to be a war I think we're going to see over from all the chip manufacturers, which leads into the next point that the White House is actually having a lot of meetings because there's a chip shortage right now. We're seeing delays in delivery of, especially on the higher end electronic equipment, those gaming computers I mentioned. You can't get the latest cards, graphic cards for them, or even the CPUs. So there's a big market in selling previous versions or obsolete technology, perhaps, or last generation technology, at least, just to meet some of the demand out there for computer equipment and gaming equipment. And of course, this has been driven not just from the pandemic shutdown, but people shifted behavior. So the pandemic, of course, shifted more people at home. More people started playing video games, getting interested in, and those habits for a lot of people are continuing past the reopening or past the pandemic. Not that we're past the pandemic yet, but the habits, spending habits, and different habits have changed moving forward. So there is a shortage out there in the chips, and the White House is trying to deal with how they can get that supply into the US in order to meet some of that demand. Coming up in Canada, as I mentioned, the banks are starting their AGM season, starting with Bank of Nova Scotia. So we'll start to see what their outlooks are. Business sentiment is improving as firms look past the pandemic, according to Bank of Canada. So the optimism is getting stronger. This is not just for business recovering, but new businesses coming out. We mentioned last year, kind of seeing the pandemic as a bit as a wildfire, a horrible, tragic event, but out of that does bring new growth. So it took out some of the companies out there, and some of the sectors were hit very, very hard. But that innovative technology and new opportunities is starting to present itself, and we're starting to see that. So we do see a lot of opportunity in that new growth coming out in the economies this year. The New York Pension Fund is divesting $7 million from the oil sands, from investment in oil sands. So $7 million doesn't sound like a lot on these pension funds, and I have sat on the board of our UK investment management committees, and $7 million in Canada for them is probably a big percentage. A lot of times, US and the UK don't see Canada as a big place to invest. But the main driver behind this is, as we've talked about, is that SRI, socially responsible investing, or ESR investing, really just set a new policy saying they're not going to invest into companies that aren't willing or aren't prepared to transition to a low carbon future. And they see the oil sand, 6 of the large Canadian oil sand companies not making enough investment into that transition. So they're going to pull out. This is something we're seeing in pensions around the world, even in Canada, in Europe, very much so in Europe. More and more, they're putting in policy to be more socially responsible with their investment practices. BMO's out there selling some assets. Their EMA asset management division. This is one of their international investment divisions. They're selling to Ameriprise for $1.1 billion, and this is just to refocus back on North America. So this was a non-core arm that they had kind of bought up and built out over the years, and it became non-core and just not bringing in the revenues that they were hoping for. So they're going to refocus that money onto the North American market. TransCanada Energy has requested information on renewable power proposals for its pipelines. So TransCanada, of course, was caught up with the Keystone expansion into the US, and now they're looking into ways that they can diversify that business into some of the green energy money that's going to be spent in the US under Biden's new infrastructure plan, which we're going to take a look at here. Of course, on the Forex front, the US dollar strengthened slightly last week as the markets flattened a little bit. Of course, it's always the safe trade. And traders are, of course, eyeing a little bit of that latest inflation data. Bitcoin rose by 3% to a record, trading at 62,500 US a piece. And the continued strength in the cryptocurrencies, and more money flows into the ETFs and funds that have now made it very available for people to access cryptocurrencies. You know, I was told the other day, someone asked my opinion on Bitcoin. I'm sure you've all heard it, but someone mentioned the other day that they thought older people were against cryptocurrencies versus younger people were much more accepted. And maybe that's true, but I still, you know, as you all know, I still see a bit of challenge around the regulatory market and money laundering issues for any country globally to use cryptocurrencies as mainstream. And this is, you know, definitely being driven by a supply-demand issue. As we mentioned, the 10-year bond notes ticked up slightly as we're looking at the inflation numbers. On the commodity front, we've seen oil hold some modest gains as Europe and Chinese economic data continues to flow out, and watching for OPEC's monthly market report. So pretty much steady things go on the oil front. We did see a bigger uptick a couple of weeks ago, and that was on the outlook that demand was showing some increase, or at least telegraphing some increase from the OPEC plus meetings, and we're waiting to see those numbers come to fruition. Gold edged down slightly ahead of inflation data, but likely we'll see so they jump up a little bit as those numbers come out, if they come out higher as we expect. Let's take a look at the Biden's economic plan. So now, or infrastructure plan. Now, as I mentioned, this has not been approved, so it's not moving forward in this fashion, but let's take a look at what it looks like and what it means for investing. You know, as I mentioned before, the United States is one of the wealthiest countries in the world, yet it ranks 13th when it comes to overall quality of infrastructure. And this has been decades in the making. This has been, both sides of the aisle have talked about spending more money on infrastructure and creating more jobs. This is the Democratic Party's attempt to bring that to fruition. So what the plan looks like, the $2 trillion, $621 billion is going to be spent on roads, bridges, and public transportation, rails, ports, waterways, airports, and electric vehicles to improve air quality and reduce congestion and limit greenhouse gas emissions. So it's more detailed than that in the sense it's actually kind of a very well thought out, you know, intricate plan. And I say intricate meaning it's got a lot of great concepts behind it. There's a lot of different moving parts, and it's very regional specific on trying to build more transit, more rail, basically trying to get more cars off the road. So in a lot of cases, building roads, but not necessarily expanding the roads, moving people to more efficient ways of getting around the country. So it's innovative, it's interesting, and I think it's very forward-looking. Of course, it's not as easy as just saying, hey, go make this road bigger or build that highway bigger. So there's a lot more details that have to be built out into this, and a lot more work with the individual regions, because every region is going to have a different need and a different plan. $400 billion is moving to bolster caregiving for the aged and disabled Americans. Maybe not always seen as infrastructure, but obviously support for your aging population, which we know is growing with the baby boomers getting older. And obviously the pandemic showed the massive need for support and better quality of caregiving for the elderly and the disabled, as they were massively affected by the pandemic, not having the support and care that they need, the number of caregivers in each facility, and the ability to control the pandemic within those facilities. So a lot of money moving into that. 300 billion moving towards, it's funny saying hundreds of billions over and over again, but a 300 billion moving to boost in manufacturing, and specifically semiconductor, medical, and clean manufacturing. So this and a couple other ones I'll point out, you know, really goes to, I think, a very forward-thinking plan of investing in future technologies, because the last administration, I think one of the biggest things they did wrong was focus on, you know, whether it was coal or oil, and coal being a really good example, because they're further down the demise of a sector than oil is, but oil is certainly trending that way, in the sense that you can invest billions and billions of dollars to try to bring back jobs, but they're not going to last, because the sector is naturally decreasing. It's naturally shrinking. I think the best example I saw in coal was and I can't remember which state it's in. You can easily Google it, but the national coal museum in the United States, I think it was in 2018, or maybe a little bit sooner, switched to solar power. So nothing says that the technology you're talking about is obsolete or out of date more than the museum that's there to represent it switched to a newer technology. So the challenges with putting all that money in is you're investing money in a sector to try to create jobs immediately, but they're not lasting jobs. Those jobs are going to decrease over time, regardless of what you do. Whether it's technology advancement within that sector, or whether it's moving to new technologies. So spending money into the economy to increase manufacturing around high tech, new tech, that disruptive technology, that innovative technology, medicine, medical advancements, and clean manufacturing, all those things are going to be jobs that are going to be around for a long time, and very likely growing, the increase in the number of jobs in those sectors as we move forward. So spending money into things like that is really looking forward to what you're trying to achieve here, which is strengthening the economy, not just today, but in the future as well. 213 billion going towards building renovation and retrofitting over 2 million homes and housing units throughout the United States. And this is, again, bringing up the quality standard of living and safety, which leads into a couple other ones we're going to talk about here when we talk about quality of water and things like that. 180 billion to advance U.S. leadership in critical technologies. So this, again, going back to bringing U.S. to the forefront in the global aspect, leading the globe in certain technologies, upgrading research infrastructure, establishing U.S. as a leader in climate science, which is, when we talk about energy, whether you're talking about oil, gas, coal, or anything else, it is a massive industry. Energy is massive globally. And to be on the forefront of what's going to be the future of energy is vital for an economy like the United States. To fall behind like they did in the last 4 years, I think was setting them up for failure in the long term. And this is hopefully getting them back on the right track as far as creating jobs, creating opportunity in a massive economic sector that the U.S. has historically led in. 111 billion to rebuild the water infrastructure and replace all the nation's lead pipes. So nothing's more evident than following the story in Flint, Michigan, where the lead pipes poison the population, lawsuits, the lack of clean water. This is just something that's been brewing for a long, long time in the United States. And they're going to spend the money, hopefully, to bring that back up to par. Actually, probably think that one's not enough to deal with their whole issue there, but at least it's a start. As we see that as a bigger problem, as you have that aging lead pipe problem down in the U.S. and in Canada as well. Not as big, obviously, in Canada, but it's still a problem. 100 billion is going to new public schools and upgrading existing facilities, and 12 billion of that going to states for them to use towards their infrastructure for community colleges. So just investing in education, always a good idea. And again, we're going to see further down here, part of that is to move people to those new, moving the educational programs to take them to some of those new jobs, some of those new areas. It's funny, we ask kids, when they're 5 and 6, what do you want to be when you grow up? And we always get the funny answers. But the answers they're given are always based on jobs that exist today. Well, had you asked me when I was 5 years old, some of the people, social media manager, I would have never known jobs existed, right? There's a lot of jobs that are going to exist tomorrow that don't exist today. So making sure the educational system is guiding kids to future opportunities and not towards legacy opportunities that might not last their lifetime. And this is really true, especially in smaller communities that are usually based around one sector. We have that issue in Northern BC, of course. Some communities completely driven by the lumber industry. If the lumber industry is suffering, of course, that whole community suffers because there's no other jobs, and people for generations have only been trained or only sought opportunity in that particular sector. So even more so in the US, as mentioned, when we look at industries like coal and oil and gas as it shifts. $100 billion in order to give every American access to affordable, reliable, high-speed broadband. And this has been brought to the forefront again by the pandemic for educational purposes. It's been vital for the kids to be able to get access to teachers and classes online or even resources, but also for workers. You know, we've seen people remote working, and more people can remote work. So all of a sudden, you don't have to live in the big cities to work for you know, the big companies. You could work remotely, but you need access to that broadband. So another important investment. $100 billion going to the workforce development to help you know, dislocated workers, and that goes back to those smaller communities to assist underserved groups, get students on career paths that have opportunity for them even before that they graduate high school. So a lot of money going into education of existing workforces who are looking to change careers, either by force or just because they're looking for better or newer opportunities, but also expanding that education even at the high school level or earlier to look beyond kind of the legacy industries of the legacy jobs. So again, really looking at that future investment into a workforce that is going to be at the forefront of cutting edge technology. And of course, $18 billion to modernize the Veterans Affairs hospitals, and $10 billion to modernize federal buildings. And this is just normal infrastructure spending. The VA hospitals have traditionally been massively underfunded, and this goes back, you know, not to pick on any administration, even going back to Obama's administration, it was an issue. You know, they made a big deal of doing a big investigation and trying to figure out what needed to be spent there. So, you know, just seeing some money going towards that is positive, and hopefully moving things forward. How are they going to pay for this? Well, they're proposed to bring back or increase corporate tax to 28% and a minimal global tax of 21%, placing a 15% levy on book income for the largest corporations. So basically what this is, we've talked about it before, but in the US, corporations have a habit of stashing money globally and not paying taxes in the United States. So they move revenues and they move profits to different jurisdictions that pay much lower taxation, and kind of not paying their, call it their dues in the United States. So this is moving to a global minimum. This is actually well received in the economic world, you know, especially on a global front. Obviously in the US, there's some pushback, but on a global front, it's seen as a positive. A lot of countries do this, and you know, taken from, you know, not saying taken from the rich, but taken from profits that don't get invested back into the economy. You know, a lot of this is rolling back some tax cut that the last administration put through that was supposed to, you know, create jobs, create strength in the economy. Really didn't. What it did was padded the savings accounts of corporations. You know, a lot of money flowed through into stock buyback plans, which, you know, sure is good for shareholders in some cases, but it's not creating jobs, it's not stimulating the economy. In fact, you're eroding those things. So all these things fairly positive. What it means for investing, well, as you saw in the last, you know, the last list of things that that's going to be invested into, there's a lot of opportunity in infrastructure investing, a lot of in equipment investing, a lot of opportunity in technology investing, especially when we talk about clean technology. So that's where we, you know, really going to focus in the United States for 2021 and into 2022 as this money flows into those sectors, and hopefully that they're successful in creating those jobs, which will, of course, you know, drive the economy into future growth. So that's what we're seeing so far. Obviously, this is up for change as the negotiations move through the Senate to get some of this approved or all of it approved, and see how that plays out. So we'll keep you on the forefront of that. I also wanted to mention on the news last night, of course, Air Canada has struck a deal with the Canadian government for a support package which is going to involve them raising some stock and issuing some warrants to the Canadian government in return for, I believe the number was about a $5.9 billion line of credit, basically, or credit, access to credit, to shore up the airline industry in Canada. So the details were just fresh out yesterday, but we'll take a look at more of that and what that stock issuing is going to look like as they roll that out today and tomorrow. So with that, as always, thanks everyone for joining us. Do visit us at mikeonmoney.com if you have any questions or you'd like to give a suggestion for topics. It's a beautiful sunny week in BC. We are allowed outside, so do get out there and enjoy it. Hopefully you can at least enjoy it in your own patios, and hopefully you can get your vaccines in the days to come. Talk to everyone soon. Thank you.